Your edge is not in predicting the market, it's in managing yourself when it moves. Hey traders, welcome back to Your Nifty Guy. It's time to gear up for a brand new trading week. In this video, I'll walk you through a clear and actionable trade plan for Monday based on price action, key zones, and market sentiment. If you want to stay ahead of the curve, make sure to watch till the very end. And yes, don't forget to like the video, share it with your trading friends and communities, comment and subscribe if you find this helpful. Let's simplify trading one day at a time. And on that note, we'll start with today's video. And as usual, the video will be divided into two parts. First, we'll be analyzing on what we had planned for Friday versus what actually played out, what we did. And in the second part, we'll hop on to planning the trade plan for Monday. I'll try to keep this video extremely short today. So for Friday, what we had planned was that we are looking at a short entry below this and a long entry above this. This was big no trading zone for us. But then again, based on the price action concepts that I actively tell you guys around, uh, I got the first trade of the day for me was this double top. Now, I had published a video on a simple reversal trading setup, which is there. So, in case if anybody has not watched that particular video, it will be good if you can go and watch, give that video a watch. It's one of the most simplest concepts that you can use for reversal trading, which gives you very small risk versus a good probable reward. So again, if you can look, the concept was similar. We had a falling market around here. Again, around here, markets formed a base and gave a rally on the upside also. Uh, Trade based on the double bottom strategy could have been taken around here as well. But again, because this was mostly a no trading zone, and I don't want to risk by taking a bullish entry around here. The overall sentiments are weak, and that was the reason I did not take this particular trade on the upside. But again, this was a very clear double top which was forming, and because the overall sentiments are kind of negative right now, plus you can also treat this as a day high breakout failure. So the markets went up above day high as well as previous closing. This is the pullback. The first, we do not always buy into the first pullbacks. We waited for this another pullback on the top, and then this is where, when this low was taken out, this is where I entered shorts. The SL was just up above this swing. I got out on this particular candle, right? The reason was simple RSI divergence. If you can see the low, RSI showed a sign of a positive divergence, and that is the reason why I got out of this particular position. And post this particular position, I took a second entry on the long side around here with SL just around here, which in which the SL got triggered out in the very next candle. And my rules are very, very simple. I have a predefined SL before entering the trade. And as soon as the market is going to trigger my stop loss, I am very, very quick in taking the stop loss. So even if I would not have taken it, market would not have given me a big loss or something which is not manageable. So what I try to do is based on the amount of SL which I am getting, I keep my positions in that way. Plus, it was anti-trend uh, trade because the overall sentiments are negative and this was a bullish trade we were taking. So obviously the quantities were low compared to what we got here. The SL was a small SL which we had to give to the market, and that is the beauty of this W setup that I have spoken about in detail, in depth with live examples from the market in the Friday's video. So please go and give that a watch if you haven't already. Post this particular trade again. Uh, we got a good enough convincing closing around here. There were some pullbacks as well, and there was a trade which could have been executed once this low was taken out, but because it was late in the day, and as I have spoken about multiple times, one of my also key rules is I do not enter into fresh trades post 2:30 to 45 p.m. Right, so that is the borderline for me. Post that particular trade, even if a setup is forming and a trade is being activated or related as per my setup, I still do not take those trades. So yes, overall Friday there were two trades. One was this short trade which gave a good profit, and another was this long trade which gave a small stop loss. And stop losses are a part of the game. So there's nothing way and there's no holy grail in which you can avoid the stop losses altogether. So it is always best and wise to take whatever stop losses the market is giving you and then move on to the next best trade. Right now, we'll plan the day for trading day for Monday. First, we'll look at the markets on a weekly time frame. So 1, 2, 3, 4, 5. 5 weeks of negative price action that is being seen on Nifty for now. I'll be deleting these. This particular zone that we had marked is of no longer relevance to us because market has actually formed a new swing, right? So this particular zone was tested, and as you can see, it acted as a good resistance like it should have. If we come back on the 15 minutes time frame, you can look at the beauty, the way in which market had reacted. We had even taken this particular trade on the downside. So now this zone is of no more importance to us. For Monday, first we have seen the weekly again. This low will be of key importance. I have already spoken to about it in the videos 24,500 odd 480 to 500 zone. The market is kind of moving in a channel as well. I I'll quickly show you guys just a second. Yeah, we'll just keep this channel on the charts for now. So again, for Monday, first simple trade plan will be a short entry below this. Again, uh, if the market is following this particular channel and if we are around here plus a gap area, we can look at some buying opportunities around here based on the double bottom or the W setup that is there. I'll quickly have the fib zone as well. So now this is the last swing from which the markets had earlier taken resistance, and this is the new low which the market had created on Friday, and we'll mark only one single zone that we focus our trades on. I'll be deleting this. This particular zone will be red because this is a resistance for us right now, right? Around here, any negative price action should again be used to create a short entry. Positive price action only above this will be taking a long entry, right? The plan of action has to be simple. We will be taking a short entry around here, a long entry above this particular zone, and as well as if we see a negative price action around this zone, we can create a short entry. Now, again, there might be another because this day was trending on the downside. We got to move on the downside. We can take the simple trade, the trap trade, which I speak about so often, but sadly, I have not been able to give you any live examples because this is a rare trade. But when it happens, yeah, it's a good risk to take in the markets because it will give you a very good reward with a very small risk. So the same thing is there. It was a good trending day. What we need is a negative candle which closes below this particular zone, and then the high of that candle needs to be taken out. This is where we can create a long trade. And if this particular trade is happening, it has to happen at the start of the day. The market has to kind of open flat. Minor gap down, minor gap up is fine, but we need a negative sentiment candle which shows that okay, there are fresh sellers who have entered the markets and given us a closing below this. And once the price moves above this particular high candles high, we can assume that all these sellers who would have shorted the markets around the fresh sellers, their stop losses would be triggering. And that is the why we are playing that particular trap setup, right? So there are people who have taken positions, created short positions, and then because of the move in against their position, they will be forced to take their stop loss, and we can get a momentum on the upside. And I will be careful in this particular trade again, very low quantities, very strict SL, and very tight trailing. That is what is required for this particular setup, right? And apart from that, I believe around the gap area, this is the gap area on the daily time frame. This is the place where we need to look for how the price is behaving. And in case of any positive price action around here, again, we can look for a buying trade, right? So I hope the plan is very, very simple. Focus on your trade planning more. And then once in the live markets, whatever scenario the market is playing out, you will be prepared because you have prepared for all possible scenarios. And definitely we can be taking our trades with strict stop losses as well as our own risk management. So I hope the setup is extremely simple and extremely clear for tomorrow. And yeah, so that's it from my side for today for this video. And I will be seeing you guys again tomorrow post the market. Till then, stay safe, trade safe, and yeah, cheers and thanks for tuning in.